Pay close attention. I'm about to prove why silver is heading to $300 per ounce right now, and why this week will likely shatter the $86 ceiling. Listen to me very carefully. You can leave your opinion in the comments. You can disagree. You can call me crazy. But I'm warning you right now. I know exactly how this works. I know exactly how they manipulate this market while you sit there thinking silver is going to correct. But it's not correcting. It's going to explode like foam rising in a pressure cooker. And if you don't understand what I'm about to show you in the next few minutes, you're going to watch from the sidelines as the greatest wealth transfer in precious metals history unfolds without you. So let's get straight to the point. No fluff, no theories, just hard evidence and brutal truth. Right now, as I'm speaking to you, it's January 5th, 2026. The Asian trading session just closed, and something absolutely extraordinary just happened. Something that confirms everything we've been talking about for months. Silver, which closed Friday at $72 per ounce, just surged to $76 in a single Asian session. $4 in one session on absolutely massive volume. This is not normal price action. This is not a retail pump. This is institutional accumulation on a scale that tells you the big players know something is coming. And what's coming is the breach of $86. And after $86 breaks, we're looking at a vertical move that takes us to $120, then $200, and ultimately to the $300 range, where the real value of silver in this broken monetary system will finally be reflected. But before I show you the technical setup, before I show you why $86 is the trigger point, I need you to understand something fundamental about what you're holding. I need you to understand why the dollar is worthless paper and why assets like gold and silver are about to become the only real stores of value on this planet. Because if you don't understand this, you won't have the conviction to hold through the volatility that's coming this week. Let me take you back. Let me take you back to 1971, the year everything changed. The year the greatest financial fraud in human history was legalized. Once upon a time, the United States had a giant vault filled with gold. Every dollar they printed was like a ticket that said, "This paper is valuable because you can exchange it for real gold." The world trusted this system. 1 ounce of gold equaled $35. It was a promise, a contract, a guarantee backed by physical metal sitting in Fort Knox. Then came the war. In the 1960s, the United States entered the Vietnam War. It was insanely expensive. They needed money for soldiers, weapons, planes, bombs, operations across Southeast Asia. The problem? They didn't have enough money in the budget. The solution? Print more dollars, many more dollars. But here's the trick. Here's where the fraud begins. They printed bills without having more gold in the vault. They broke the ratio, they violated the contract, and they hoped nobody would notice. But the neighbors noticed. France was the first to get suspicious. Their president, Charles de Gaulle, said, "Wait a minute, you have more dollars in circulation than gold in your vaults. I want my gold." And he literally sent ships, actual naval vessels, to collect the gold that corresponded to France's dollar holdings. Other countries did the same. Germany wanted their gold, Switzerland wanted their gold, everyone wanted to exchange their dollars for gold before it ran out. There was a run on the bank, a run on Fort Knox. The moment of truth came on August 15th, 1971. President Richard Nixon had two options. Option 1, deliver all the gold and go bankrupt. Option 2, break the promise. Nixon appeared on television and said, "We will no longer exchange dollars for gold." Just like that. Overnight. The dollar stopped being a ticket for gold and became just paper, just ink on cotton fiber backed by nothing except the government's word and the military's ability to enforce that word. And today? Since 1971, the dollar has had no gold backing it. It's what they call fiat currency. It's valuable because the government says it's valuable and because people have faith in it, but faith is fragile. Faith breaks. And the debt? The United States can print dollars whenever it wants. That's why the national debt exceeds $35 trillion. It's money created from nothing. It's a promise to pay back a loan using currency that can be printed infinitely. It's a mathematical impossibility. It's a Ponzi scheme on a national scale. So when someone tells you that the dollar is strong, that the dollar is safe, that you should hold cash instead of silver, they're either lying to you or they don't understand the system. The dollar is pure paper. It's a liability masquerading as an asset, and every single dollar you hold is losing purchasing power every single day as the Federal Reserve expands the money supply to fund government deficits, to bail out banks, to keep the system from collapsing under its own weight. Now let me bring this back to silver. Let me show you why silver at $76 is still criminally undervalued. Let me show you why $300 is not a fantasy, but a mathematical inevitability. Silver is real. It's a physical element. You cannot print it. You cannot create it out of thin air. It exists in finite quantities in the Earth's crust, and more importantly, it's being consumed by industry faster than it's being mined. Solar panels need silver, electric vehicles need silver, electronics need silver, 5G infrastructure needs silver. The green energy transition that every government on Earth is mandating requires silver in quantities that dwarf current production. And here's the kicker. While demand is exploding, supply is collapsing. The easy silver has already been mined. The high-grade ore bodies are depleted. What's left requires more energy, more capital, and more time to extract. And with energy prices rising due to the Venezuela crisis and the Nigerian oil strikes we discussed, the cost of producing silver is skyrocketing. We're approaching a point where the marginal cost of production, the cost to pull one more ounce out of the ground, is going to exceed the paper price on the COMEX. When that happens, mines shut down. Supply drops further, and the price has to rise to incentivize new production. But the paper market, the futures market, the derivatives market built by the banks to control the price, that market is based on leverage and lies. It's based on the assumption that most contracts will never stand for delivery. It's based on the assumption that traders just want price exposure, not physical metal. That assumption is breaking down right now. We're seeing delivery requests spike to historic levels. We're seeing registered inventory at the COMEX drain at a rate that will take it to zero within weeks if the current pace continues. And we're seeing the spread between paper silver in New York and physical silver in Shanghai widen to levels that prove the paper price is fake. This weekend was the catalyst. This weekend, while you were sleeping, while you were with your family, geopolitical events unfolded that set the stage for what we're seeing in the Asian session right now. The detention of Nicolas Maduro in Venezuela on the morning of February 5th. No, wait, let me correct that. The detention happened and the markets are reacting now on January 5th. The detention of Maduro is sending shockwaves through commodity markets because Venezuela has massive derivative exposure in gold, silver, and oil. Contracts worth tens of billions of dollars that were collateralized by resources Venezuela no longer controls. Those contracts are defaulting. The banks on the other side of those contracts are scrambling to cover their positions, and they're buying. They're buying everything they can get their hands on. But it's not just Venezuela. Nigeria is experiencing coordinated strikes across its oil fields. The largest oil producer in Africa is offline. The United States Navy is tightening the blockade around Venezuelan waters, intercepting tankers, enforcing sanctions with military force. We're looking at an energy crisis. We're looking at a commodity shock. And in a world where energy is expensive and geopolitical tensions are rising, capital flows into safe havens. It flows into assets that cannot be printed, that cannot be debased, that hold value regardless of which government is in power or which currency is collapsing. So silver opened the Asian session at $72. Within hours, it was at $76, $4. But here's what you need to understand. This is not the top. This is not even close to the top. This is the beginning. This is the base camp of Everest. The real move hasn't even started yet. Let me show you the technical setup because the charts are screaming breakout. The critical level, the line in the sand for this entire bull market, is $86.67. That was the recent high, the peak that silver hit before the banks smashed it back down with coordinated selling, margin hikes, and bearish research notes. They've defended $86 like it's the gates of their fortress, and for good reason. Because once silver breaks above $86, it triggers a cascade of technical buying that will overwhelm any remaining selling pressure. The trend-following funds, the CTAs, the algorithmic trading systems that manage trillions of dollars in assets, they will flip from neutral to maximum long. Their computers will automatically buy billions of dollars worth of silver futures within seconds. That buying pressure will push the price vertical. And there's almost zero resistance between $86 and $120. Look at the chart. Look at the volume profile. There are no significant supply zones, no areas where sellers are waiting to dump inventory. It's blue sky, it's a vacuum. Once we break through $86, the price will gap higher in a move so violent that it will make last night's $4 surge look like a warm-up. We're talking about $10, $15, maybe $20 moves in a single day. Intraday swings that will destroy leveraged traders on both sides, but will reward the holders of physical metal with life-changing gains. Now let me tell you something that's going to shock you, something that goes against the narrative you've been fed by the mainstream financial media. The big investors, the ones manipulating this market, the ones who are about to push silver to $300, they're not just Asians. Yes, China is a massive player. Yes, the Shanghai premium proves that Eastern demand is insatiable. But the real money, the institutional money that's been accumulating silver for the last 2 years, while the price was suppressed, that money is American. It's Russian, it's European, it's sovereign wealth funds, it's family offices. It's billionaires who understand that the fiat system is dying and that hard assets are the only refuge. You think this is a grassroots movement? You think retail investors buying silver eagles are moving the market? No. Retail is the cover story. Retail is the distraction. While you're debating on Reddit whether silver will hit $80, there are institutions quietly buying hundreds of millions of ounces through over-the-counter transactions that never appear on the COMEX. They're taking delivery. They're storing it in private vaults in Switzerland, in Singapore, in Dubai. They're removing it from the system. And when they're done accumulating, when they've taken every available ounce off the market, that's when they let the price run. That's when they allow the public to see the real value. And that's when $300 silver becomes reality. But here's the thing. They're not doing this out of altruism. They're not trying to help you get rich. They're doing this because they've run the models. They've analyzed the supply-demand fundamentals. They've looked at the monetary system and realized it's broken beyond repair. They know that in a world where governments are printing trillions of dollars, where debt to GDP ratios are exploding, where inflation is embedded in the structure of the economy, hard assets are the only things that will preserve purchasing power. Silver at $76 represents one of the most asymmetric risk-reward opportunities in financial markets. The downside is maybe $10 or $15 if the banks manage to orchestrate one more coordinated smash. But the upside is $200, $300, maybe $500 if the monetary system truly breaks down. Let me walk you through what's going to happen this week. Monday opens with continuation of the Asian momentum. Silver is already at $76. The European session will add fuel to the fire as European investors wake up to the news of Venezuela, Nigeria, and the silver surge. By the time New York opens, we could be looking at $78 or $79. The banks will attempt to defend the $80 level. They'll throw everything they have at it. High-frequency trading algorithms will slam the bid. They'll try to trigger stop losses. They'll try to create the appearance of a top to shake out weak hands, but they're going to fail because the buying pressure from Asia, from industrial users, from sovereign entities is too strong. Every dip will be bought. Every attempt to push the price down will be met with immediate demand. By Tuesday or Wednesday, we'll be testing 83s, 84, 85 dirham. This is the danger zone for the shorts. This is where they start to panic because they know that $86 is the point of no return. If we close a daily candle above $86, the technical breakout is confirmed, the algorithms will trigger, and by Thursday or Friday, we could be looking at $95, $100, maybe even $110. The move from $86 to $100 could happen in 48 hours. It could happen in 24 hours. It could happen in a single overnight session if the buying pressure is strong enough. And here's what's going to destroy the retail traders who think silver is going to correct. They're going to short the breakout. They're going to see silver at $88 and think, this is overextended. It has to come back down. They're going to sell. They're going to bet against the momentum, and they're going to get liquidated. The market is going to squeeze them so hard that their accounts will be wiped out before they even realize what happened. This is not a game for weak hands. This is not a market for people who trade based on emotion or gut feeling. This is a market where you need to understand the fundamentals, the technicals, and the psychology of market manipulation. The banks want you to think silver will correct. They want you to sell your physical. They want you to close your long positions. They're issuing bearish research notes. They're raising margin requirements. They're doing everything in their power to make you believe that the rally is over. But let me ask you a simple question. If silver was really going to crash, why would they need to try so hard to convince you? If the fundamentals were bearish, the price would just fall on its own. The fact that they're fighting this hard, the fact that they're deploying every weapon in their arsenal, tells you that they're terrified. They're trapped in massive short positions. They're bleeding money on every dollar the price rises. And their only hope is to trick you into selling so they can buy your metal and cover their shorts before they're forced into bankruptcy. Let me give you the cold, hard mathematics of why $300 silver is not only possible, but probable. Current global silver production is approximately 800 million ounces per year. Current global silver demand, including industrial use, investment demand, and jewelry, is approximately 1 billion ounces per year. That's a deficit of 200 million ounces per year. That deficit has to come from somewhere. It comes from above-ground stockpiles. It comes from the vaults. It comes from the registered inventory at the COMEX. It comes from recycled scrap. But those sources are finite. The stockpiles are being depleted. The COMEX registered inventory has fallen from over 100 million ounces 2 years ago to barely 30 million ounces today. At the current rate of decline, registered inventory will hit zero by March or April of this year. What happens when registered inventory hits zero? The exchange defaults. They declare force majeure. They settle contracts in cash instead of metal. And when that happens, confidence in the paper market evaporates instantly. Traders will realize that the COMEX price is meaningless because you can't actually get metal at that price. The real price, the price for physical silver that you can hold in your hand, will diverge completely from the paper price. We're already seeing this divergence in Shanghai where physical silver trades at an $8 to $10 premium over the COMEX quote. But when the COMEX defaults, that premium could explode to $50, $100, maybe $150 per ounce. And at that point, the game changes forever. At that point, the market for silver shifts from a unified global market with a single price to a fragmented market with multiple prices, depending on whether you're buying paper or physical, whether you're buying in the West or the East, whether you're buying spot or forward. The financial system will have to reprice silver to reflect its true scarcity. And based on the supply-demand deficit, based on the industrial demand that cannot be substituted, based on the monetary demand from investors fleeing fiat currency, that repricing takes us to $300 per ounce at minimum. Some analysts are projecting even higher. Some are saying $500 or $1,000 per ounce if the monetary system breaks down completely. I'm being conservative with $300 because I want to give you a realistic target that's achievable within the next 12 to 24 months based on current fundamentals. But could it go higher? Absolutely. If hyperinflation takes hold, if the dollar loses its reserve currency status, if central banks around the world start competing to devalue their currencies, silver could go to numbers that sound insane today, but will seem obvious in hindsight. Now let me address the elephant in the room. Let me address the people who are going to say, but Asian guy, you said this before and the price dropped. You said silver was going to the moon and it crashed back to $70. Why should we believe you now? Here's my answer. I never said the path would be straight. I never said there wouldn't be volatility. I never said the banks wouldn't fight back. What I said, and what I'm saying again now, is that the fundamentals are bullish. The supply-demand deficit is real. The monetary debasement is real. The geopolitical tensions are real. And eventually, fundamentals overcome manipulation. Eventually, reality asserts itself. Eventually, the price reflects the truth. The drops you've seen, the crashes from $75 back to $70, those weren't failures of the thesis. Those were liquidation events engineered by the banks to shake out weak hands and cover their short positions. Those were buying opportunities for people who understand what's really happening. And if you sold during those drops, if you panicked and took a loss, that's on you. That's not a failure of the analysis. That's a failure of conviction. Because the people who held through the volatility, who added to their positions during the dips, those people are now sitting on gains. Those people are about to get paid in a way that will change their financial lives forever. So here's what you need to do right now. If you're holding physical silver, do absolutely nothing. Do not sell. Do not be tempted by short-term price swings. Do not listen to the bearish research notes from Morgan Stanley or Goldman Sachs telling you to exit. Those notes are written by people who are short silver and need you to sell so they can cover. Hold your physical. Add to it if you have capital. Every ounce you buy below $100 is going to look like the deal of the century when silver is trading at $300. If you're holding paper silver, ETFs, or futures contracts, you need to understand the counterparty risk. You need to understand that when the squeeze reaches its peak, when the price is vertical and the shorts are desperate, the exchanges can change the rules. They can force cash settlement, they can suspend trading, they can declare force majeure. If you want to survive the squeeze, if you want to actually profit from what's coming, you need to convert your paper to physical as soon as possible. Yes, you'll pay premiums. Premiums right now are running $4 to $8 over spot, depending on the product and the dealer. But those premiums are nothing compared to what they'll be in a few weeks. Better to pay $80 for a physical ounce today than $150 in March when dealers are sold out and you can't get metal at any price. If you're thinking about shorting silver because you think it's overbought, because you think it has to correct, let me save you the pain. Don't do it. You will get destroyed. The momentum is too strong. The fundamentals are too bullish. The institutional buying is too powerful. Shorting silver right now is like standing in front of a freight train and hoping it stops. It won't stop. It will run you over. And you'll lose everything. The only winning position in this market is long. The only question is whether you're long enough to benefit from the move to $300. Watch the $86 level obsessively this week. That is the trigger. That is the line that separates the bull market from the supercycle. If we break $86 and hold above it with a daily close, the breakout is confirmed. At that point, every technical trading system on the planet will flip bullish. The hedge funds will pour in, the momentum will become self-reinforcing, and the move to triple digits will happen faster than anyone expects. But even if we don't break $86 this week, even if the banks manage to defend it for a few more days, it doesn't matter. The fundamentals haven't changed. The deficit is still 200 million ounces per year. The inventory is still draining. China is still buying. The solar chokehold is still tightening. Venezuela is still in crisis. Nigeria is still offline. The war bid is still supporting the price. Eventually, $86 will break. It's not if, it's when. And when it breaks, the people who positioned themselves early will be rewarded beyond their wildest expectations. Let me finish with this. We are living through the greatest monetary transition in human history. We are watching the end of the fiat currency experiment that began in 1971. We are watching the dollar lose its purchasing power in real time as the government prints trillions to fund deficits and bail out banks. We are watching the emergence of a new monetary order where hard assets, where physical commodities, where real things that cannot be printed or debased become the foundation of wealth. Silver is not just an investment. Silver is insurance. It's a hedge against the collapse of the system. It's a store of value that will outlast governments, outlast currencies, outlast financial institutions. When the dollar is worth nothing, when the paper contracts are settled for pennies, when the banks have failed and the system has reset, silver will still be silver. It will still be valuable. It will still be money. And the people who held it through the volatility, who understood what was happening and had the conviction to stay the course, those people will emerge from the chaos with their wealth intact and multiplied. So make your choice. You can listen to the mainstream media. You can listen to the bank analysts telling you to sell. You can listen to the skeptics in the comment section saying this is hype, or you can look at the evidence. You can look at the Shanghai premium. You can look at the COMEX inventory. You can look at the supply-demand deficit. You can look at the geopolitical chaos. You can look at the monetary debasement. And you can make the rational decision to position yourself on the winning side of history. The bell is ringing. The Asian session showed you the power of what's coming. We went from $72 to $76 in one session. This week, we're going for $86. And after $86 breaks, we're going for $100, $120s, $150, and ultimately $300. The takeover is happening. The East is draining the West of physical metal. The paper price is diverging from reality. The system is breaking. And the only question that matters is, are you holding silver when it does? This is not financial advice. This is a warning. This is intelligence. This is the analysis that the institutions don't want you to see, because if you understand what I've just explained, if you grasp the magnitude of what's happening, you will never sell your silver. You will hold it until the system resets and silver reclaims its place as real money. Subscribe to this channel for updates as this historic week unfolds. Leave your comments below. Tell me I'm wrong. Tell me I'm crazy. But remember this moment. Remember what the price was on January 5th, 2026. Remember that silver was at $76 and everyone said it couldn't go higher. And then watch what happens. Watch as we break 86. Watch as we hit triple digits. Watch as $300 stops being a fantasy and becomes reality. The countdown has begun. The breakout is imminent, and the greatest wealth transfer in precious metals history is happening right now, whether you're ready or not. Choose wisely.